What up, y'all? I have been recently decided to get back on the phones and start dialing some leads, having a little bit of fun with it. We got a ton of new agents getting started. And in today's world of telesales, it's something I've never done. I was in the field, certainly sold a few on the phone. But in today's world, I thought it'd be fun to go out and show all the agents that are struggling and complaining on how hard it is that old sucker like me can pick up the phone and start booking appointments and closing deals. So I'm going to be doing some more of it. We're going to be sharing it. If you like this type of content and want to see more of it, comment sales below and we'll get your message. I'll keep adding more. Hey, what's up, Sherry? It's John. How are you? Good. Now, bad time? Or are you still good? I love it. All right, let's see. Pulling up your stuff here. Did you guys get to? I assume you got to take a peek at some of the stuff on those pages we were looking at. Did any of it make any sense to you at all, or is it all Chinese? Okay, perfect. I figured that's pretty common, so don't feel bad. We're gonna walk through it. Are you guys both there? Okay, cool. I want to make sure you guys understand at least what this thing is telling you. Let me know when you get. Let me know when you. Yep.
He's going to explain some of the stinking benefits on us.
Let me find that first text from you. All right, so if you look at, let's see, which one is this? All right, I'm looking at the first text you sent me that is, all right, let's see, Lincoln Benefit, the one that says Lincoln Benefit Life Company at the top. And it's kind of centered. It looks like a single sheet of paper. You had it dated. Oh, what is this thing done? It says values as of 6/9/24. I don't know if you're on that page. What page do you have in front of you of that you text me?
6/9/25.
Okay. Is that the one you text me? Oh, no, you haven't even knew.
Yeah, yes, this is the same one.
Let me see the date. It is all blue writing. Is that the page you're looking at? Okay, yep. And are you looking at the one with the blue writing that says annual statement in the top left?
Yes.
Okay. And then is it the page right below that? Do you see how long is your policy expected to last? Are you on that page or a different one? Are you on the one that says policy info?
Expected to last.
Okay, cool. Let's start there then. This one's really simple. It says, how long is your policy expected to last? You are here is your current age, right? Which I think we said is, are you 65, Jody? Is that how old?
He's 64.
64. Okay, cool. So that red, you are here, that's how old you are now. If you see the next, it looks like blue on my phone, where it says age 72. And then below it, it says guaranteed. Do you see that?
Yeah.
Okay, and then the very next one says age 76, and it says non-guaranteed. You see that one?
Yeah.
Okay, so all of that means is really, really simple. I'm going to show you the kind of proof of it below. They're basically saying this policy, they guarantee you'll have it till age 72. And the longest you'll have it is age 76. That's what that little chart right there is saying.
Okay.
So I guess one, were y'all aware of that first step? And I'm going to show you a couple other things.
Well, so then, and those little dots mean coverage is expired without value. What does that mean?
That's what that means. That's unfortunately what the next step I got to show you is. So if you go, remember we said 72 is guaranteed, right? So if you look below, and they color code them. So you see that guaranteed is in blue and the non-guaranteed is in green. You see the two colors? Well, if you go down to that little chart below, you'll see guaranteed assumptions is in blue, non-guaranteed assumptions is in green. And so the way these policies work, let's look at the blue side, the guaranteed. You see the age, 65, 66, all the way up to 77. That's how much you pay per year, right? And then your guaranteed assumptions mean they'll guarantee this $200,000 in coverage, and they'll guarantee you'll have a policy value of $8,164 until you're age 72. After 72, there's no more guarantees. So then the question becomes, well, how do we know if we have insurance or not? It's going to be very directly based on that policy value number. Do you see that policy value?
Yes.
Okay. So all policy value means is how much cash value you've built up along the way. So if you looked at your current statement, which we'll just look on the top line right now because it's super similar. But if you looked at your current statement, there would be a number. Here's your net surrender value, your policy value. There's a number that it's worth today. The way these policies work are it's a little bit complicated, so I'm going to try to explain it super easy. As you age, there's an actual cost of insurance. The insurance costs you a certain amount every month. That cost of insurance is not necessarily what you pay every month. So you send a check, $400 a month or whatever you're sending, and it goes into a bucket. From that bucket, they take out the cost of insurance. As you age, that cost goes up, right? So your insurance, and it's on one of these pages. I don't see the number right now. We'll figure it out. But what I can tell you is if you see the policy value, do you see how it goes down every year?
Yeah.
On that guaranteed? That's because the cost of insurance is higher than the monthly payment at that point. So instead of having you pay more, they take the difference in premium out of your cash value. That keeps the policy going. The downside of that is once the cash value runs out, now we only got two options. You either pay more or the policy goes away. Right? Because we got to keep it going. The difference between the blue and the green side says this is what we hope happens. We hope, because there's an interest rate tied to this. You get interest every year. I assume you see those little statements where they give you interest every year. They do it once a year. And so they go, we hope this thing earns interest this year. We can't guarantee it. We only guarantee the blue stuff. But if it earns interest, here's what we hope it earns. Here's what we maybe can say it earned in the past even. We might be able to tell you here's historically how well we do. We could tell you all these things. But the green, as you can see, is non-guaranteed assumptions. So they're making assumptions on best case scenario, your cash value and what it will be. That's where you see the green policy value. However, if you notice, even in the green side where they go, even with our best assumptions at age 77, how much insurance do they show you have? 0. So best case scenario, you have coverage till 70, that 76 year. Worst case scenario, you're at 72. So somewhere in there, this policy will go away, or you'll have to start paying more money. So I know that was a mouthful. So before we go to what are our options or anything, does that make any sense? And do you have any questions about it specifically?
Makes sense.
Okay. Jody, clear as mud for you too?
Oh, I
Say again, bud?
just all about the cost of the risk.
Yeah. So ultimately for you now, it's like, this is the only policy you have on Jody, right?
Yes.
Okay. So how's health? You got anything going on health wise?
He's old.
I'm chasing you, so I get it. What do you got going on health wise? Either what do you take meds for or anything major? Heart issues, cancers, anything? No meds? No shit. Okay. It's good. Why'd you say kinda healthy? What do you got going on?
Well, I'm a little heavy
Okay.
on my frame.
Okay. What's your current height and weight?
5'11", and I'm at 250.
Okay. That's not too bad. It gets heavy. I've been there. It gets a little heavy to carry. I was at I'm 6'1", and I had to lose 50 pounds because it happens. Yeah, I ain't mad at that. All right. So no prescriptions at all. Do you have anything prescribed that you just go like, I should take it, but I don't?
Nope.
That's good. All right. And any history of anything? Organs, heart, cancer, kidneys, lungs, anything at all?
Nope.
So you're super healthy, relative minus what you think about your height and weight. Otherwise, you're pretty healthy. Sounds like.
I did have skin cancer that was removed about 7 years ago.
Okay.
At least, yeah.
Okay. No issues with it. Just They cut it out and
Yeah.
kept it moving. Yeah, no meds or anything, I assume. Okay. Cool. Yeah,
That's expected. Yeah.
makes sense. Not too shabby. And you guys, let me see, when did this policy, you've had this policy a long time. 2010. Yeah, 2010, had it since. So I guess this is a very similar situation, Sherry, Jody, as Sherry was in, we were talking about earlier. It's like, this is one of those things where eventually it's like the train is coming at you. Eventually you're going to make a decision on this thing. Health is the most important piece of buying insurance because it's your age and your health that buys the stuff. And so people in this situation tend to have to go, all right, do I want to fix it now while I can, while I have my health, and put it into something permanent, same as earlier, not going to be as much insurance for the money because it's not 2010 anymore, of course, and we're not 40. However, this policy is eventually going to turn into nothing for you. Now, one thing I didn't mention, if you look at that surrender value section, we have clients that do decide to make changes and they do go like, all right, I'm just going to wash my hands of this policy. I'm going to move on, get a permanent one. Whatever the surrender value is will be sent to you in a check. So you do get a little something out of your policy, unlike Cherry's, where it was a term policy, it had no cash value really in it. This one, at the very least, instead of taking money out of the bucket to pay your insurance every month, you could just take the whole bucket home, whatever's left in it, cash it in, take it home, and then use that to apply towards future payments, or hell, go to Vegas and bet on red. I don't know, take her on date night. You do whatever you want with the money if you choose that route. Yeah, you can. Yep, you could use it for whatever you want. It's your money.
Yeah.
Let's see what that. Yeah, it's going to be a fair. Let's see. Let's look at today's.
Okay. Insurance, which.
Yeah, it's just having some cash there. Yeah, let me see if I can have. I think one of those showed. Let's see the date on this one. This one says.
I think it's like 68, which is right about where everything starts to wash.
Yeah.
And to cash it out and put it into term insurance, because term insurance is just for remember what you absolutely need for a short term, and that's
the term is the type that's going to run out on you.
Yeah.
So what most people do, and this is some clarity, what we got for Sherry earlier is what they call whole life, meaning it lasts your whole life. What most people do is they get either a term or a UL like you did when they're younger to take precautions in case something major and unexpected happens. I die young, we have a mortgage, we have college, we have car payments, whatever it is. Typically, as you get into y'all's age, people don't need as much benefit, but they need it permanently. Versus when you get a big one younger, it's okay that it goes away. It's kind of the purpose.
okay.
But what most people do is they same as we did earlier with Sherry, is we look at the amount and go, all right, what are we spending a month on insurance? And what does that get us that we know is temporary? We know we're renting the policy essentially. Unfortunately, we got a little bit of cash out of it. But my assumption is that your preference, and this is probably just a terminology thing, instead of purchasing something that runs out and you donate to another insurance company, my assumption is if you're like most clients, you'd rather purchase something that builds cash and will definitely go to your family.
Oh yeah, because the interest rate on insurance is superior.
Yeah.
Yes.
Yeah. Okay, cool. So and again, what I told Sherry is, and this is a decision to be made, do you try to float, do you lock something in now at a smaller price, smaller permanent one, and try to float both for a little while? What most people do, instead of trying to float both, they just go, let me put all the cash into one, get me as much as I can now while I'm at my age. Because today is going to be the cheapest you can ever buy insurance again. Tomorrow it's just going to get more expensive. The day after it's going to get more expensive. And eventually they take that right away from you to be able to purchase it. So ultimately we can look at some options, pricing wise, see how much coverage we can get you. But you don't necessarily have to put it all into it. If you're like, I don't need $400 a month worth of insurance. So I guess now the conversation becomes, Jody, are you also looking at this point to just make sure burial and some other things are taken care of, or do you need a big ass policy still?
The insurance that I'm looking is to cover, at least pay off the mortgage and put me in the ground. That's about it.
And you owe about 100 on the mortgage?
160, 170.
150.
Okay. She says 150.
All right.
I'll go with her numbers.
That's a good man right there. Been married for a minute. So 150K on the mortgage, and then burial, whatever, 20, 30, 40 grand, so something for burial.
Yeah.
Okay.
Okay.
All right, cool. Now,
They can cook me in.
yeah, I love it. I love it. Now so a couple questions. Because we do a lot of what they call mortgage protection. And we'll definitely look at some different options. What do you know what the house is worth today, roughly? I assume you have some equity in there. You said how much? Okay.
He's appraised at 541.
Oh shit. Okay. So you got a bunch of equity in here.
Yeah.
Good for you. Okay. Dope. All right. So if I assume we understand, and I just I'm going to assume you do understand this, but some clients don't. So if you need me to explain it further, I will. Typically, what happens is when someone passes, a few things happen. Most people decide to downsize, move in with grandkids, kids, somewhere else. Most people don't stay in the big house typically. So I don't know if you already have a plan of that or don't. But what I see happen sometimes is when someone passes, they don't have the money to continue to pay the monthly payment, which is obviously why you're trying to protect it. I assume to make sure we don't lose the house, right? If you were to pass. And what my assumption was, if you lose the house by the inability to pay it and it forecloses, I assume you know the bank keeps that equity.
Yes.
Okay. So what I always tell my clients is at the very least, let's protect that equity because you got 400 grand worth of equity in there. So this is a strategy option. I'm going to tell you what a lot of clients do, Jody. Obviously, you can get as much coverage as you want. And my boss will be fired up the more I sell you, obviously. But what some people do, instead of covering the entire, what's your monthly payment on that phone? Yeah.
22.
No, it's not that much. It's like 19 or 20.
Let's call it $2,000 a month. Is that fair? Rough idea?
Yeah.
Okay, so call it $2K a month. Let's say, Jody, is there or Cherry, I guess, be the better question. Am I correct in that if Jody passes away, there is a chance you sell or move eventually? Or are you like, okay. Perfect. I figured. All right. So I'm going to give you a strategy. You tell me if you like the idea or not. Again, I'm going to get you out of this a little bit cheaper than some people do it, but a lot of my clients do it. Instead of getting called 150 grand in coverage, Jody, to pay off the whole mortgage. What a strategy you could do, because the reality is if she sells the house when you pass away, she gets, if it were tomorrow, she'd get 400 grand out of this thing. Right? By selling the house. If it's down the road, it's only more. What I have a lot of my clients do is instead of getting $150,000 worth of insurance, which will obviously be like a mortgage payment at this stage, especially if you want it permanent, I suggest that people get a smaller amount of insurance. And instead of protecting the balance in full, you protect the monthly payment. So meaning you're paying, call it 24 grand a year in insurance in mortgage payments, $2,000 a month, 12 months a year. What a lot of my clients do, instead of getting 150 grand in coverage, they'll get 20, 30. That way, Jody, when you die, instead of her having to run and fire sale the property or do anything there, go from the funeral home to the real estate office and figure it out, she can have a pile of money that just pays that monthly payment. So call it 20, 30, 40 grand, whatever the number is. There's a bucket of money over there that she then pays the $2,000 a month with until the property sells, and then you get the big equity check. And then she can go buy the next house cash. Versus buying a big insurance policy that you have to pay for all the years for her to then still just have to sell the house and still have to wait for the equity. I mean, you can do it either way. But a lot of people do it that route and they protect the payments for a year or two. So she doesn't have to think about anything for a couple years, put it for sale, clean it up, take care of it, do whatever, move out, get the equity that you've earned, and then not have to pay insurance along the way and retain all the cash you guys built up over the years. Does that make sense?
Yeah, 100%.
Currently paying for his $200,000 policy, $394 a month.
Yep. Okay. Let's look at some options for you. Let me open up a new window here. If you guys got a few, I'm gonna plug in.
We also have a rider clause on here for Sherry too.
I saw that. Yeah. So somewhere in there's going to be a page. I saw the additional insured typically, and I don't see the page on here because I normally I would show you. And we can always call in with them typically. And I don't know how this works on yours, but a lot of times the policy for the additional insured is a rider. In this case, it's a rider. So if you were to die first, Jody,
Yeah.
your policy no longer exists because you file a claim on it. So meaning the rider would no longer exist either because the policy is no longer in existence.
Yes.
So it covers her if she dies before you.
Yeah.
But if you die first, yeah. So if you die first, the rider goes away.
I'm meaner than
Thank you.
Does that make sense?
yes, that makes sense.
Cool. All right, let's see. Let me plug your info in here and let me pull up some pricing options for you guys. I'm gonna look at a few different plans for you guys. You don't mind hanging a minute if I look for a couple options for you, do you?
No, we're good for an hour and a half.
All right, perfect. I'm gonna look at two options here. For those of you that have followed me for a while, you know I've helped build this agency up to over $200 million in paid annual premium per year. We have over 5,000 agents a year that sell, and I am rebuilding. We're building a new base shop, helping people build big agencies, get to multi 7 figures in income, or producers that want to just sell and get to a multi 6 figure sales career. Hit me up. I'm hiring direct. I'm looking to train and mentor winners that want to work their ass off and build something dope. Click on the link below, or you can go to johnwetmore.com/join and put in your application. We'll see if I'd be interested in working with you. DM me, hit me up, whatever you like. And you said the cancer was 7 years ago, correct?
Yeah, 7 years.
Okay.
I'd have to look at the photos to tell you what date.
It's over 5 though, for sure. It's definitely over 5. Okay, cool.
Oh, yes.
All right, so I'm going to give you the first option here. All right, I'm going to give you a couple choices here. We can go down a couple different paths. So like I don't know if you heard this earlier when I was looking at Sherry, some of these policies, because they're permanent, because they have all the guarantees and the benefits and the living benefits and all the things they do, they limit how much coverage they'll give out because they're great policies. So yeah, if you want additional coverage, a lot of clients will do multiple policies if you want over the max, because again, we have multiple options. So you guys have the pen and paper handy?
He just got it together.
Cool. Let me know when you're ready, and I'm gonna give you the same $40,000 option that we talked about earlier. I'm gonna show you for Jody. So 40K for him, 40K relative to what he's paying now. And again, this is permanent insurance, so it's permanent. Builds cash value, won't expire, won't change. Everything stays the same. In my view, the way we explained it earlier, this would be 20 grand for burial, and that would give you 20 grand to make a year's worth of mortgage payments as well. Assuming Jody passes. And then again, you can decide if you want more. But 40 grand is only $255 a month. And then from there, if you wanted additional coverage, you go, all right, I want another 20 grand, 30 grand, whatever, to fill the rest of the budget. Or you can go, I'll take 40 grand and I'll save myself $150 a month relative to what you're paying today. So I guess initial thoughts on coverage amounts. Are you looking for more than that? Or do you want to kind of save a few bucks? And And same process. We do have to go through to make sure we can get you covered, obviously.
Okay, if he cashed out this other insurance policy and took that $30,000 and put it towards this new insurance, how much insurance would that give him?
We could look at something if you'd rather just do a one-time payment. I
Time payment, but paying
Please leave your message
Yes,
for
ma'am.
279.
Sure. Yeah. Let's do this then. Why don't we do this? Again, it would be a kind of a two-step process. Right. So what I would do so this would be the additional coverage. So what you're saying is let's take that cash out of that one, the 30K, whatever the number is, we'll figure it out. Apply that towards a permanent policy, which we can do. And then take a part of what you are currently paying monthly and purchase additional insurance that you pay monthly for. Is that what I heard?
Yeah.
Yeah, we can do that. Well, let's start with it because correct. Yep, you won't have to on that. What I would suggest,
Leave your message
Sure.
for
let's do this. Because even they're two totally different policies. One you pay monthly, one you put a payment down. Both of them require health underwriting. And the one where you do the one-time payment, I have to know the amount, and that one's it's a little bit more complex. It's a few more steps. So let's look at what do we want to be at monthly. Let's do that policy first. That will give me the underwriting. That will give us an approval and lock in that one. And then we can make the switch because I don't want to switch on something before you have coverage. It wouldn't make any sense, right? Because we don't want to risk any period of time where there's no coverage. So my suggestion would be start with this one, the 40K, see what we get you approved, get that one locked in place, and then we'll work on the other policy, determine how much cash value there is, get that check in the mail in the next few weeks, and then apply that towards how much insurance can I buy as a one-time payment also.
That's a go.
You good with that, Jody?
Permanent, yeah.
All right, cool.
Great.
All right, let's run through this. Give me 1 second. That's good. That's a good hand. You like to gamble?
We used to.
I used to play some no limit a while ago. It's been a minute though.
Yeah.
Right. When the World Series of Poker was first out, I used to watch it then.
We used to do poker parties with my coworkers.
Cool.
So, yeah.
Cash or what?
We would,
Yeah.
buy in, and then
Love it.
it was more about bragging rights
Sure.
because
Yeah.
you can always talk shit at work that
Yeah.
we don't like
Yeah.
playing the shows.
Yeah. I used to have a little $20 buy-in game. It was nothing. It was just literally, it was about beating the other guys.
Yeah.
What state were you born in, Jody? Now, one thing about this product, Jody, which is really cool that we're going to apply for, this company's kind of funny. They actually give you the first 3 years. So I always ask people this: do you plan on doing tobacco or smoking for the rest of the time? Everybody has different opinions, whether they'll quit or won't quit.
I don't believe
Well, I'm gonna give you something. This company is kind of crazy. So obviously when you're a smoker, you pay more. So I put in that as a smoker, those smoking price. So what they do is that now I'll give you the total prices at the end. But what they do is they give you a non-smoker rate for the first 3 years. And they go, if you quit tobacco in 3 years, let us know. You keep the non-smoker rates. If in 3 years you're still smoking or still chewing tobacco, you just pay tobacco rates. It's a cool little program that we put a lot of people on.
Okay.
So you don't have to decide that now. You got 3 years to figure it out. It's kind of cool.
All right.
All right. We said all these medical issues. We had cancer, but it was just skin cancer, no diabetes, no heart disease, no lymphoma, no amputations, no MS, kidney disease, lupus, Parkinson's, or liver disease, strokes, TIAs. None of that.
No,
Okay.
no.
not confined to a nursing home, hospital, wheelchair, any kind of that stuff.
No.
There
I can find you already.
you go. I hear that every day. 253. All right. I'm gonna do the same thing where I'm gonna send a text code. Do you want me to send it to this number I'm calling you on, or do you want me to send it to yours, Jody? Do you care?
Please send it to mine.
All right, what's your cell? All right, this is gonna be the same thing. It's gonna send you a little code to verify. It's gonna let me pull your medical information in the background. Just give me a little 6-digit code, please. Sherry, same account as earlier you want to use? Send you another text here in a second, and this is going to be validating the full application, the initial underwriting. They do like a prescription check to make sure you're not fibbing. The initial prescription check came back okay. So this signature here, give me your cell again, Jody. It's a different screen.
3.
Yep. And then what I'll do, I know you guys have some stuff coming up, so we'll schedule probably tomorrow time because we got to call into 3 insurance companies for you guys. So we'll give, once this one's done, we'll give you a little bit of a breather, and then we'll make a plan of attack for the pending ones. All right, all done. Okay, so I got your approval here too, Jody. That one just came through. You got your pen handy still? I'm going to give you this policy number as well, and I will text it to you also, but I'll give it to you so you can write down now.
All right.
And you already have all of my personal info written down from earlier. So this one here, again, is 40K in coverage permanent that will be in place. And again, you get the policy will come in the mail a couple weeks, all that jazz, same as before. And I guess from here, if you have any questions along the way, certainly let me know. But what we can do now is I have these other, we got True Stage, we got American General staying, and we have that mutual. And yours, Jody, that we need to call in and let them know we're terminating. Which y'all schedule over the next day or two? You guys pretty open, or you wide? Does that mean it's wide open? You doing nothing, or does that mean you got a shit ton of stuff going on? He stays busy.
Yes.
Okay.
Yes. Let's see. Tuesday and Thursday, I am on campus.
Okay.
So
You want to?
Wednesday,
You home Wednesday?
Wednesday, I'm home, but let me look at my calendar.
Okay.
You know what? Wednesday. What is that? On 3 o'clock. Wednesday after 10:30.
Okay.
I should have a clear schedule.
Okay. Let's do 10:30, 11:30, 12:30, 1:30 my time. Let's do, how about like noon your time?
Okay.
Will that work?
I'm good with that.
Okay. I'm going to put you down noon your time. It's going to take a little bit. Jody, are you around the next 2 days? Are you around Tuesday? Also, or
I am.
or I'm sorry, Sherry. I meant to say Sherry. Sorry. I got yours, Jody. My bad. You're around. I may do yours, just me and you. That way it doesn't take as long, so we can kind of break it up. So I'm going to look at, you're around tomorrow, Miss Sherry?
Yeah.
Okay. You around all day?
Yep.
Okay, cool. And I know you wake up early as crap. So I'm going to kind of see how the rest of today's schedule plays out for me for tomorrow. Jody, I got ours locked in for noon on Wednesday. That we'll call in. We'll do all the stuff with that company. Miss Sherry, I'm going to shoot you a text in a little while, and me and you are just going to do it tomorrow on your two, because yours are going to be easier. It's a quick call. I'm contracted with them. It takes 2 seconds. There's no return of money. It's a lot easier process. So we'll handle your two tomorrow. Probably, let's see. I have a 12. I have a 9 o'clock. I might do it early with you tomorrow as well, because you like early. I'm gonna put it on my calendar for probably 10 a.m. my time, which is about 7 your time. So I'm gonna put yours down then. Same thing. I'm gonna try to get them on the line before if I can, so you don't have to hang on hold.
Yeah.
the entire time. So I got you down for 7 a.m. your time tomorrow, and then Jody, I got you down for noon your time Wednesday, and we'll handle those other policies and figure out how much cash you got, and then by then I'll have some rough ideas of how much coverage that check that refund can buy you. And then we'll just kind of wait for it to come in and you deposit it over the next few weeks, and we'll work that second policy out at that point. Okay.
And the payments, they're gonna suck out of our checking account automatically?
Yep, it'll be the 6th of every month going forward, but the first one, it's gonna take them a few days to set it up. They won't, you're effective and you're insured today. You just won't see the first payment draft for a couple days because they got to set it all up and do the ACHs and all that jazz. So the first one will be a few days, and then it'll be the 6th of every month, roughly going forward. The only thing that makes it different if it's holiday or weekend, it'll come after. Yeah.
All right.
So, any questions for either one of you at this stage? Are we all good and clear? Okay. All right.
Clear as coffee.
I love it. Do we feel good about how we've taken care of things, though? That's what's most important.
Yeah.
Okay. I love it. Love it. All right. Well, if you guys need anything in the meantime, let me know. Don't forget, save my cell number. And if you need me and you call me, just please make sure you leave a voicemail if I don't pick up.
All right.
All right. And you can always text as well. I'm a texter also if that works for you. So otherwise I'll chat with you tomorrow, Sherry, and I'll chat with you, Jody, on Wednesday. Okay, bud? All right. You're welcome. Very welcome. See you guys.
All right. Bye-bye.
Bye.
Hey, work.
Hmm?
That was good work right there, buddy.
Work. Easy work. Easy game when you know how to play. Easy game when you know how to play. Oh shit! I actually got that. I forgot to. Hey, you know what's funny, Giovanni? Is he still on here? You still on here, bro?
Yeah, I mean,
Do you know what I did that I forgot to do?
still in the same price he's paying?
Huh? No. I'm about to do that too. Or we're gonna keep doing that. I quoted him 2, but he actually got 1.
Oh shit.
Yeah. So I'm gonna get him. What I'm gonna do is I'm gonna take the difference. I'm gonna get him another policy, and then who does a single premium one now? Any clue? I used to use Roy.
I think Royal still does it from
Do
now.
that. That's what I figured.
Like one-time payment for the whole death amount.
Yeah, they want to take the cash out of their UL and just buy a paid up one.
Yeah, I think Royal never still does that shit, to be honest.
Yeah. Yep. So yeah, I did lower this one. I didn't eat up their whole 400. That was on purpose.
How old was he?
66.
Well, have you not thought about showing him a simplified issue whole IUL?
I did, but I just didn't want to fuck with it right now. I almost did. He's in a UL now. You know what I mean? Then I'd have to go through the whole guarantee thing, and you know what I'm saying? It's like, sometimes when it's like that, I don't necessarily put him in the same thing they were leaving. I know.
Yeah, but those are made to fucking last and not kill the cash value.
Yeah. No, I get it. I'm gonna rerun some shit too to see about adding a bigger one permanently. And if you didn't catch it earlier, when I was with her, she said she was healthy and only took 2 meds. And then when it came to do the underwriting, she gave me 6 more.
Oh shit.
And when they opened the call with him, this is another reason why I did it. When I opened the call with him about medical, I was like, "How are you? Pretty healthy?" He was like, kinda. So I was like, shit. But then he takes no meds, and supposedly the only thing he was worried about was his weight. He also had skin cancer 7 years ago. So I was like, you know what? I'm going with what I know is going to work.
Always are people who are healthy who say they're unhealthy, and always are people who are unhealthy as fuck who swear they're healthy.
Yeah, dude, it's so weird. It's so weird. So anyway,
Bro, you're not lying.
I'll take another $2,500 instead of pushing it, and then I'm gonna go run them. I might run them a second, just permanent one, after I figure out how much cash they're gonna get out of that other.